Welcome, everybody, to the next episode of Lumida Non-Consensus Investing. We're streaming live on YouTube, Twitter, and wherever you consume your social media. Really pleased to have a friend and special guest. I think he has the record number of appearances on the Lumida Non-Consensus Investing podcast, Michael Parekh. Michael really started his career in the 90s at Goldman Sachs, where he was a lead internet coverage analyst, took a lot of these companies public. So he's been through a few cycles, and he writes a terrific blog on AI, and he has insights every day. He's tracking what the CEOs of the cloud businesses within the hyperscalers are talking about. And we want to talk about a few things. We want to talk about CapEx spending, is it sustainable? We want to talk about Anthropic, trillion-dollar revenue forecast, GDP growth of 10%, the dynamics around OpenClaw and Mark Zuckerberg in the background here. There's a lot we want to get through to create some perspective on what's happening. Welcome back, Michael. How are you?
Great to be back, and good to see your handsome face again.
I'm trying. I'm not on GLP-1s yet. I have to tell that to my wife too, but so
There's
far
a
so
pill
good.
version now.
I'm gonna try to do it the old-fashioned way. It's just called fasting, eat less, calories in, calories out. We'll see if that works. I want to get into Anthropic, right? You saw, of course, setting the stage for you here. We had Sam Altman had this disastrous interview with Brad Gerstner at the end of October, where he talked about $1 trillion in committed spend obligations. In Wall Street, we call that debt. And he had a very defensive reaction, and it really created a correction due to that. And now you have Microsoft trading at 2022, PE multiple lows, Max 7 stocks ever treated. The CapEx payers, which we've been talking about, have been punished. CapEx receivers have generally done well, like the memory-related players, etc. And now Dario, the CEO of Anthropic, was on Dorkesh's podcast, and I was surprised. I was surprised that he was talking about fantastical numbers like $1 trillion in revenue potential in 5 years, and they're debating whether the trillion revenues happens in 5 years or 3 years. I'm saying maybe not ever. And so I said, let's get Michael on here. Let's get some perspective. Let's try to answer the question of, is AI a bubble?
Well, if you recall, Ram, a long time ago when we first did one of these, I think I said that we're, for the last 2 or 3 years since this is the 4th year of ChatGPT, we're in the mainframe stage of AI. And these people we're talking about, whether it's at the big tech companies or the two companies we talked about, OpenAI and Anthropic, they're essentially big tech philosophies. They're mainframe companies. This is their DNA. So the Dario interview, which is 2.5 hours with Dwarkesh, it just ekes out that they're in a mainframe environment. They think everything is centralized. This is that their 2 or 3 sets of labs are going to basically provide most of the compute in the world, which is a reality on today's technology. But in the timeframes they're talking about, in the next 3 to 5 years, which is this data center filled with geniuses, which is what Dario's thing that he wrote in his essay last year. He has another 40-page essay out this year, which I wrote about, and so we'll put up the things in the show notes. And the point is, they still very much believe in the mainframe ideology, that AI is going to be served up by these 3 or 4 companies as foundational LLMs, and they're going to collect all the revenues. In that interview with Dario and Dwarkesh, he echoes what OpenAI CFO said at one point, that, hey, we might be able to even get away with value-priced LLMs. In other words, if you, Mr. Drug Company, use our AIs to create the next multi-billion-dollar GLP-2, we get a piece of that, maybe. Okay, now think about that. Okay, as a historical test case, Microsoft launched Excel in '85. In that, and under that theory, they could have said, "Hey, KKR, we get a piece of RJR Nabisco in '87. The Barbarians of the Gate, or any PE deal, because you used our spreadsheets to create the models for the overnight bid at $30 billion to buy XYZ." That's never happened in technology before. That's how much these guys are stretching to go to whatever revenue numbers they want to shoot for. And this is not to take away from the amazing momentum of these companies, right? Dario rightfully says that he's had a 10x in revenues every year since founding, just 3 years ago. He's now 14 billion. The number for next year is supposed to be in the 50 billion range. OpenAI is in a similar kind of higher level trajectory, etc. But all of them have crazy costs. OpenAI far more than in their official costs, as opposed to Anthropic kind of soft costs. And Dario, in this interview, literally said that if we're wrong on our assumptions on the mainframe world view of the world, we're 2 years away from bankruptcy, right? And which is what he's desperately trying to avoid. So we've never seen this any other tech wave.
We've never
as
seen.
We can be excited.
I agree. Let me play back what I heard from you. Number one, there's a premise that we're in a mainframe world, in contrast to, say, I guess, a client-server world or a grid world. That's one. I'll let you double-click which.
I'll come back to that. Yes. Right? Yes.
The second thing is that what you pointed out, I thought was right on the mark when you said, look, if they're off by 2 years, they go bankrupt. We've never seen this level of burn. Burn means losing money. I think in case people forgot, that's what burn rate is.
700 billion this year. The 4 companies.
These burn rates are extraordinary.
And OpenAI.
They can only be funded from customers or raising money. The customer flow is not there. They have to bet on the future with the spreadsheet. And we all know that the bigger you are, the harder it is to grow. It's called limits to growth. They did add a couple billion in January, so good luck. And they've got to withstand competition. And the third part is on the timing of this whole thing, right? So this isn't a characteristic of a good business model. If you've got to nail your CapEx planning with that level of precision, when AI, by definition, is this kind of singularity event where it's hard to make predictions around, and you have intensifying competition.
Totally. And all of this also forgoes, because I mentioned the mainframe stage. What we're also seeing are anecdotal pieces of evidence. The OpenClaw, OpenAI thing of this week just been an example. I've been long talking about that. We're looking at the mainframe to PC cycle that the tech industry saw over 50 years. IBM to Microsoft and Intel and Dell today. That took 50, 60 years. We're going to see that. I said, 4 years ago when I started writing my daily posts on AI reset to zero, I said that we're going to see that probably in 3 to 5 years. What we saw this week with OpenClaw, and I'm jumping ahead a little bit, which is AI agents that one developer, a very accomplished software guy, and someone who had built a software company, sold it as a solo endeavor over 3 months, which he launched last November, by the way, ironically, on the third anniversary of ChatGPT, managed to basically get millions of developers around the world in 3 months excited on AI agents, mostly running on local Mac minis on your own computer, not on data centers. That's one of the key takeaways I want to highlight. And as much as OpenAI is excited about agents, and so is Claude, which is Anthropic, etc. Yes, we're going to need tons of compute. There's no question.
Right.
But a lot of that compute is going to come from our computers on our desktops and our phones. That's one of the big transitions here. And why is that interesting? Is because the underlying assumptions that the Darios of the world use is scaling in a mainframe way. Throw a lot of data, huge amounts of data, huge amounts of compute, and huge amounts of model parameters to basically scale the models to be these God models, these AGIs, these geniuses in a data center kind of stuff. On the other hand, this was theoretical until this year we're starting this, which is the OpenClaw thing. AI agents that are local, that you just develop. The reason almost 1 million developers have gone nuts in the last 2 months, and me inclusive, I'm not a developer, but I've been playing around. I bought 2 Mac minis and I've been playing around with them. And I'm sure you're playing around with this. Most of the stuff it's calling is local. The data is all my personal stuff under very strict safeguards.
Privacy matters. And for enterprise matters even more. Right.
But
Yeah.
it totally matters, and those problems will be solved very quickly now with this open claw. Accelerates this, and it means that the data that everyone is looking for, that is going to be the huge burner of tokens, intelligence tokens, are going to run more locally for inference in the next 2 or 3 years. That doesn't mean that that the need for mainframe compute goes away. It's just that it dents the demand curve that the
Right.
hyperscalers are assuming right now.
Right. It
That
undercuts
a
the
lot of that,
premise.
it
Yeah. I mean,
undercuts the premise.
they see themselves as like this large tree trunk on which their branches, and everyone's built off of their stack, when in fact the computation is moving to the edges. So they're forecasting, call it $1 trillion in revenue. They're not alone. It's Anthropic and OpenAI. There's
Totally.
not that many $1 trillion revenues to go around. All right. US GDP is what, like 24, $25 trillion. They're talking about 10% GDP growth. By the way, I'm a big believer in the transformational power of AI. I know you are too.
Yes.
But the way we've always experienced technical innovation and productivity growth is through the form of lower prices. That's how we feel technology. Lower cost of energy, lower cost of fertilizer, whether it's potash, lower cost of storage or memory cost over time, lower cost of producing a car. When I hear 10% GDP growth and $1 trillion revenue, what I hear is rent seeking. And it seems like a basic misunderstanding of economics.
And I want to add, to your point, lower costs. I mean, that's what you and I and everyone in technology has. It's in our DNA, 30 plus years. Moore's law, prices go down, hardware, software. And by the way, in AI compute, that's been happening. It's getting more efficient with bigger compute. The flip, and I wrote about this, months ago, that, because of the world geopolitical situation, bans on China, supply chain things, tariffs, etc., all of this, now and now the AI capex ramp itself, with the world basically with 3 companies that create or make all the memory, the SK Hynix, the Microns, and the Samsungs. Basically, all the stuff that goes into local machines, whether it's your smartphones or PCs, there, if post CES of 2026, most of the companies that were going to announce all these great AI devices locally are saying, oh, prices may be 30% higher, and we don't know when the availability is because they can't ship it. Just now it hit the tape. Sony, PlayStation, they're basically pushing back their console for the next PlayStation back to 2028 because of memory shortages.
Yeah.
So I just want to point that out, because this is also an issue for the industry that they have not, and the industry's not absorbed yet.
Yeah, no, I agree. I agree.
And yeah,
I mean, the chart of Micron looks like the chart of gold. It looks like they're being the same trade, and it looks like the chart of silver. And people forgot that memory manufacturers actually rely on silver and they rely on gold, and both charts can't go up at the same time.
and don't
They
forget
look like the
copper.
same trade. And copper, of course. I own copper. I like that idea too. And the cure for high prices is high prices. I've been reading stories, to digress a bit, about jewelry stores struggling to inventory gold and make money. When you start seeing those things, then things start moving in the other direction. So just coming back to the overall revenue picture. So is that $1 trillion revenue fantastical and unachievable? Is it an emperor has no clothes? Like, are they just totally crazy? Is that, given what you said, it's not the future is not centralized, and we expect deflation, not higher costs.
My concern is the revenue growth rates that are being implicitly sanctioned in these conversations. 10x growth. What if it's 5x growth, which is still extraordinary? 10x we've never seen,
Mhm.
consistently for a long time. These companies are getting a little bit high on their own supply. When they say we can basically maybe argue for capturing, there's the value capture model, that we get a piece of the drug, we get a piece of whatever transaction you do with our technology. They are getting a little bit too optimistic. So yes, I do think we're going to see a lot of revenue growth,
A
but
little
it may
bit,
disappoint.
a little bit, or way over their skis.
I think the projections are ahead of their skis. The other
I agree.
big buzzword that we need to keep in mind is the word diffusion. This is the Silicon Valley fancy word of that's fashionable right now, which and Dario talks about in his podcast with Darkwish, which is that diffusion simply means, it's basically a fancy way of saying how fast do these AI technologies get absorbed and adopted and used by millions of
Yes.
people, and millions
Yes.
of businesses. No
Yes.
question, last year, this year, businesses are spending top down on AI like crazy. It's taking huge amount of budgets away from traditional software models, which is why we saw a 300 billion hit on the software apocalypse on SaaS models. That's correct. But if you talk to the people in the middle of these companies, and there's tons of surveys and studies on this, the people who actually execute, the minions, they're saying, hey, we're not seeing the returns from the AI investment yet. So you may see hundreds of billions or trillions, whatever number you want to use, of AI revenue growth, but it may take longer than 2 years. It may take 6 years, 10 years. The diffusion, the mainstream
Yes.
adoption, whether it's in business, I think will take longer,
Yeah.
which it has always done with technology, client server, cloud, etc. On AI, it's even faster. I just think that the CEOs of the companies today are too optimistic in terms of how
100%.
vocally they're saying 2 years, which I think
agree.
is
I agree.
is
You know,
irresponsible.
I agree. 10x growth means that Anthropic expects that next month they'll generate and achieve all of the revenue that Anthropic achieved in the last 10 months, which is absurd. And there are limits to growth. And your point on diffusion is a great one, because there is a natural rate of adoption that links to the ability to acquire new skills and education and accessibility and corporate focus and iteration. So yeah, I think they're way ahead of their skis. So if that's true now, if we play that out, then it means that you've got committed spend obligations. Those are contracts to pay on pain of default that can't be funded. And so that means that you've got debt all over the ecosystem. We know that Microsoft reported that they had $400 billion in revenue performance obligations. Those are obligations they face off with counterparties like OpenAI and others. When Microsoft reported that, 48% of, by the way, is attributed to OpenAI alone. Microsoft stock price dropped 10%, as if the market discounted the value of those RPOs and is treating them as liabilities, or certainly worth a lot less than par value. But if I play out what you're saying, then the RPO stack that's outstanding, right? You've got Oracle, you've got Microsoft, CoreWeave, and other players out there. We should expect impairments to the value of those accounts receivable. Is that a fair inference?
I think that's a fair inference, and I would expand the list. Amazon, which also saw its similar stock hit 10% or more. As an example, we've on a $200 billion budget. I had a post up yesterday. Quoting Jassy as John Hammond from Jurassic Park. We've spared no expense to compete on AI with the big boys, etc. And AWS is losing share to Microsoft, but Microsoft is only gaining share right now because of the circular deal-making machine, half of which is coming, as you said, from OpenAI. And so there is that circularity element going on as well. And then the other thing I'll just point out, all the companies, the big ones that have huge cash flows, I had a post, number 992, we'll put it in the show notes, is, they're all stretching now into debt. Google just did one of the first ever 100-year bond issuances. It was oversubscribed because of the current environment, 6 and an 8 coupon. And you think about it, 100-year bond that was several times oversubscribed as part of a $20 billion package. And that's longer than the lease that the UK got out of China for Hong Kong. And I looked it up. There's only one computer company that's over 100 years old today, is IBM. And then if you're generous, you can throw in like some of the telecoms and so on in the US for a 100-year kind of existence of companies in the US and the world. So these are very friendly times for AI financing.
It's a damned if you do. Yeah, it's a damned if you do, damned if you don't game theory, right? So if you're a hyperscale with trillions of dollars of market cap, you're competing for market share and relevance. You have to invest in the future. If you don't invest in that future, then the revenue goes to the customer, and presumably it's a sticky kind of revenue. If you underinvest, then you also lose research, which means you get model obsolescence, which Dario talked about too. So they have no choice but to invest. It reminds me of like the airline companies back when you had the airline wars, or the railways in the 19th
Great point.
century, where there's massive capex spending for market share. That didn't end well. You had a lot of bankruptcies that played out there. Oracle has, by the way, $455 billion in revenue performance
Hmm. Obligations.
obligations. So,
And a
uh,
lot of
and,
that is OpenAI,
and a
obviously.
lot of that is OpenAI. Now, is there a world where?
And some of that
Yep.
potentially going, the proceeds of that by Larry and his son going into Warner.
Right.
They're selling AI to go long old media.
Can there be another buyer that steps in? Like, suppose OpenAI and Anthropic wake up 6 to 9 months from now and they say, gee, we're only growing at 3x, not 10x, which would be a dramatic, tragic event, just so we're all clear. Means they're not going to be able to pay their performance obligations to the supply chain. And Oracle has its own supply chain too in the semiconductor category. It flows down, right? It
Great question. Yeah, I agree. Could there be another outcome?
yeah.
Right now they're all saying IPOs. I'm on record. I think. Look, I mean, Elon's planning the biggest IPO this year. On his birthday in June. SpaceX, now that he's merged XAI into it, $1.25 trillion. I think there's an equal chance that he just does a reverse merger into Tesla and creates a $2
I
trillion
agree.
plus dollar
I
company
think that
and,
has
and,
to
and
be the
uses it as a
path.
financing mechanism. But I think that's also the path potentially for if under Dario's down scenario that 2 years in its bankruptcy, if the demand is a little slower, etc., relative to the obligations, then there's a better than it's a non-trivial chance that these companies, one or both of them, could be part of some of the bigger tech companies.
I don't. Let's play this out. So I don't know that Microsoft, one of these companies, would want to do that. Microsoft would be the logical absorber of an OpenAI
of
because
OpenAI, correct.
they'd be assuming the liabilities. Now, a bunch of those liabilities are to themselves, 48%, so they can net out that component of it. But the other portion of the liabilities are not, and that is off balance sheet debt that they'd be bringing on board. And these CFOs have seen what's happened to their stock price by taking out debt and issuing capex. Microsoft is below the 200-day moving average. So is Amazon. Oracle is way below it, and in a severe bear market. So I'm skeptical that they will try to import the cancer of massive capex pain and go over the cliff with the other ones. I think the
If
reason why they structure this is because they want to cordon off the liabilities. They get the upside of equity participation, OpenAI. They get the IP rights, but they don't have the capex spending obligations. So I think they like that structure. I think the bailout by hyperscaler won't happen.
if it happens, it's at numbers far different than what we're looking at today. And
Much lower
and by the way,
valuations.
Ram, we've
Yeah.
seen these kinds of markets and eventualities in almost every tech cycle, not as dramatic as what we're potentially
We
describing.
saw it in 2008 when JP Morgan bought
Right.
Bear Stearns for $2. JP Morgan
You
said,
got
hey,
it.
you have a bunch of liabilities I can't quantify. And so you think your market cap is $40 billion? No, I think it might be $8 billion. I'm not sure. And no one else can value or make sense of the mess. I need a balance sheet to absorb it. So I do hear echoes of that. And we're talking like $1 trillion numbers. These are not small numbers. These are big numbers. If you look at, say, the PE ratio of NVIDIA, it's like 45 trailing. Let's play out the OpenAI math. If OpenAI, they raise $100 billion through this capital raise. Looks like it'll get done. I'm sure it's not easy. I have no doubt it's not easy. I haven't heard Brad Gerstner say he's investing. He said he would in October. He's not there now. So it's not easy. They got $100 billion. Most of that will go back to NVIDIA because they're the lion's share in the industry. They have a 75% profit margin. They're going to get $50 billion in earnings just on the OpenAI financing at a 45 PE ratio. That's $2 trillion of implied market cap. So if OpenAI and Anthropic can't keep the capex funding machine going, that must have a negative knock-on effect to the rest of the semiconductor category. And I think markets are trying to price that in.
No, unquestionably, and semiconductors. Since you brought up that sector, that's traditionally been one of the most cyclical things we tend to forget in this current secular argument for AI, which we all believe long term. But the problem is that the bid-ask spread is getting wider, meaning
Yeah,
the founder CEOs are thinking success in 2 or 3 years, geniuses in a data center or AI god or whatever you want to call it, in
yeah.
shorter timescales. And the reality of with diffusion and geopolitical issues and worlds basically all trying to say, countries basically say, we're going to make it all ourselves. It's very, very tough headwinds. We've never seen this. When I analyze that stuff on a bottom-up basis, I absolutely come into your
I mean,
camp on
there are not even enough workers to establish those data centers. Like, there are
we don't have
physical
the people.
constraints. And then look at how many politicians on both sides of the aisle, including Ron DeSantis and AOC, who are talking about how we have a jobs problem, we don't need high utility bills. So let's play out the bull case, though. Let me make my best effort, just so we
Good.
can challenge ourselves here. And feel free to
I love
poke
it.
holes. Okay. So I also at the same time believe NVIDIA will sell out of every single GPU. I have 100% belief they'll do that.
I agree with that. I
That's
agree
not
with
going to
that.
change. So
Next 2 years at least. Yes.
is there another buyer? Suppose Oracle faces the default by OpenAI. Is there some other buyer of that contract that steps in, assumes the obligation to get a data center earlier in the queue? NVIDIA told CoreWeave, hey, we stand ready to take up any capacity that remains available. So they've given CoreWeave the NVIDIA put, which distinguishes them from Oracle. Obviously, CoreWeave is substantially outperformed Oracle. But is there another buyer in the waiting that can absorb that GPU demand?
Low probability, but I wouldn't rule it out because, as I've long been saying, this AI stuff is coming its way like a freight train, and they're ready for it. I think more than the people assume, and that is Apple. Their capex actually went down this in the last quarter. They've been setting it out. They've got more
Apple is
cash.
shrewd. Apple is shrewd in capital management. Yeah.
Well, I've been of the view that the world of AI, especially on a bottom-up basis, the open claw kind of stuff, it's all moving into applications on a bottom-up basis. And Apple is in the catbird seat in terms of AI applications beyond ChatGPT. In other words, if there is a repricing of AI compute and data centers, and the actual use of this stuff beyond chatbots starts to really grow into the mainstream, a lot of that is going to be on the Apple side of the equation. They will need more compute. Right now, they're absolutely relying on the same parties without paying out the big numbers to the Oracles, to the Googles of the world, et cetera, in terms of their compute, to the Amazons. They're big customers of those entities. They don't have to buy the stuff directly. But at the same time, as you know, they're in the same line at TSMC in Taiwan, neck and neck with NVIDIA. So Apple and NVIDIA this year, the latest analysis, 40% of TSMC's revenues, and NVIDIA is nudging ahead. And if there is a retracement or availability of some of the supply, et cetera, Apple could again step in and commit tens and hundreds of billions of dollars to the next level of nodes to TSMC, like they did in over the last 5 years, to again at different prices. So my view is that the bottom-up demand, organic demand creation of AI beyond chatbots, which is agents and all these other things, especially as it moves to devices plus cloud, which is Apple's model, we should not rule them out as being a potential buyer of last resort at a potentially better price of some of this stuff.
At a much better
theoretically in
price.
the
I mean,
next
they've been the
yeah.
most conservative on capital spending, right? They scuttled the Apple car, for example. They've
Correct.
done acquisitions that are small and bite-sized, although they've done many of them. So we'll see. I don't know that there is enough of an alternative buyer base. I mean, the buying demand is driven by these fantastical financial projections from OpenAI, Anthropic. They created the vast majority of the RPOs. Another could be the US government. I saw an article that came out today that said that Claude was somehow involved in the operation to extract Maduro from Venezuela. I'm sure that article was leaked by someone at Anthropic after the Dario interview. It was a very timely article that came out today. It's the kind of article that you want to release just ahead of a fundraise. It looks like the Department of Defense is spending $14 billion in AI now. If there's classified spending, that wouldn't show up in the budget. But $14 billion isn't nearly enough either. I'm sure it's growing. I have no doubt it'll grow 2x or 3x. Hegseth has said he wants to increase defense spending from $1 trillion to $1.5 trillion. That's 500 billion incremental over the next 5 years. That's still not enough though, and they're using that in atoms too, not just LLMs.
But that is you put your finger on a key point on the U.S. government as a buyer and defense as a huge vector, obviously, because right now Anthropic is on the verge of losing the U.S. Defense Department and the U.S. government because of their insistence on safety and certain rules on where AI cannot be used, Claude cannot be used, like the Maduro stuff and other things that the U.S. government wants. Just I think as we were getting on this call, Hegseth and company basically said, "Hey, we may cut Anthropic off." That's on the assumption that OpenAI says, "Okay, we'll sell you stuff," and then of course Elon with Grok. And so there is, gamesmanship going on that front from a safety and what AI can ethically be used to be weaponized and so on. And in a world where everyone is worried about geopolitical competition with China, etc., it's all fair game. We're in kind of uncharted waters on that stuff.
I'll make a
that side of
bet
the equation.
that Anthropic will sacrifice their values for revenue. I'll make a bet.
They did it already in terms of, remember when Anthropic took money from the Middle East sovereigns, and Dario basically had his nose head up high, said, "Oh, we normally wouldn't take money from them because they're dictators, but we'll do it this time."
Right.
And he'll likely have to do the same thing on this defense issue.
I agree.
And by the way, we were talking about valuations and stretched balance sheets, but valuations on AI. Don't forget Palantir and that world, where the valuations are in another stratosphere on defense-related stuff. Anduril obviously doing well as well.
Yeah, so Palantir intermediated that Claude contract. So they were using Claude for the LLM layer, and the U.S. government had the contract through Palantir. Then Claude became aware of it and started asking questions. So I'm sure they'll figure out different questions to ask. And that's the other buyer of last resort is the Middle East. You and I talked about how Saudi Arabia wants to create 60 data centers. That's GPU demand. So I think we're in agreement that the financial projections are nonsense. It's fantastical. They're way ahead of their skis. That makes sense. The LLMs are like the tail end of the commodity bullwhip. It's the most volatile and sensitive to small fluctuations in demand, and there's a lot of risk. And where you want to be is upstream in the supply chain and avoid that volatility. So I think that the hardest question that I'm trying to sort out is like NVIDIA. Like if we believe NVIDIA will sell every single GPU, I think that's true. I also think that there'll be contract breaches due to RPOs that are not sized to reality. I also think NVIDIA will continue to beat and raise, although that hasn't really mattered, right? You saw NVIDIA report last quarter, they had a beat raise and an acceleration, which is very significant. Then the stock price gapped up, went up 10%, and then gave back all of that and more the next day. So you had institutions selling that. How might this play out for NVIDIA from a market's perspective? It's got a 25 times forward PE. It's got a 60% expected EPS growth according to analysts. It's probably going to be higher than that because they tend to sandbag. Can they shake off these issues in the ecosystem, or are they going to be part of a correction when Anthropic and OpenAI miss their financial projections?
Again, I think the kind of issues we're talking about are the probabilities for this stuff is higher than what people assume. At the same time, for the next year or so, because we just went through a whole quarter for all the techs and so on, I think NVIDIA is relatively okay, at least for this year and into next year. And given that markets look out 1 year ahead, I think the question that you were asking in terms of NVIDIA's demand, especially going from Blackwell to Rubin, is okay. And remember, the other thing that is also gating the stuff, I would be more concerned if I saw TSMC be a lot more aggressive on spend versus all the demand everyone's talking about in terms of their capex. If you look at how their quarter just was released, etc., they're disciplined, so they're actually the biggest grown up in this picture.
I agree.
Right. And there is something, Ben Thompson, this abstractor, talked about the TSMC break. I think there is something to that. And that is adding a little bit of discipline to where we, so it's kind of a weird situation. I think I am in the boat that the GPUs, everything that all of these TSMC can make for NVIDIA, everything will get sold and used. It's just that it's going to be bumpy. The financing, the funding, all of that stuff. And there could be a lot of volatility in the stock prices. As you saw the 10% up and 10% down. We're going to see a lot more of that.
I think so too.
Because there's a game of musical chairs going on.
I don't think NVIDIA. I agree. I don't think NVIDIA can actually shake off the market beta. I think their stock price will be impacted by the volatility of a failed financial projection or default in RPO. I agree. TSM is more of the adult in the room. TSM in the last year, by the way, is up 85%, far outpacing NVIDIA, which is up 35% in the last year. And NVIDIA is also TSM is a lot cheaper at 21 times forward earnings, although more expensive it has been in history. Go ahead. Yeah.
And by the way, on the geopolitical front, I mean, this is out of our lane in terms of non-financial. But when you look at the China risk in terms of Xi wanting to invade Taiwan by 2027, and he's gutted his entire, most of his generals in the last few months for political reasons internally, etc. China's, if you read between the lines on what's going on in China, they're basically saying, we may growl like a lion in terms of taking over Taiwan militarily, but the risk of that is actually far lower. If anything, Taiwan is a lot safer from China militarily than is in the markets right now. And that may be a scenario for 2 or 3 years, at least way beyond the 2027 deadline that Xi put in one of his speeches a couple of years ago. It's a geopolitical element. I don't know how to factor it into the forecast of all this. It's hugely important to our technology, whether it's memory, whether it's GPUs, certainly for NVIDIA. Jensen obviously does huge amount of flying back and forth to balance both sides of that equation. But for any, I kind of view the military gutting of the generals in China as a positive that's not been.
I agree
on the analyst side.
It's hard to prosecute a war when you fired your generals. In fact, when you do that, it creates risk of destabilizing yourself. It's like Rome and the Praetorian Guard. You can eliminate your Praetorian Guard only so many times before they come after you. They stole their own emperor.
And Stalin did that right before Hitler said, "I'm going to go east, not west."
Fair enough. So yeah, I'm not concerned about the China-Taiwan risk. I agree. I think it's lower than ever. Let's talk about memory. So it's funny, you and I, we were talking about Micron and memory 2 years ago. We all knew back then that hardware-based memory was the constraint. It's like not a new thing. This is a very familiar story to anyone that's been tracking memory. And like the markets woke up to, oh, hey, it's about the memory again. And there are only 3 players in town, which you name SK Hynix, Micron, and Samsung, 2 of which, by the way, are in South Korea, which has done well as a country. Let me pull up a chart of Micron for you. So this is up 330% in the last 1 year. It's up 70% in the last 3 months. And the forward PE ratio of Micron is still relatively cheap at it's 11 times EV to sales. That's not cheap, but the forward PE is like around 10 times, something like that. So, you alluded to this a bit earlier. We know these are cyclicals. We also know there's secular demand for GPUs and there's secular demand for hardware-based memory, right? And a cyclical near the top looks cheap because they're over-earning. And a cyclical near the low looks expensive in terms of valuation because they're under-earning. That's what makes cyclicals, challenging. Do you see value in Micron now? What's your view on Micron?
It depends on the discipline of some of the stuff. You mentioned, you compared this to airlines in terms of semiconductor cyclicality, et cetera. And we talked about TSMC in terms of being the final grown-up or the arbiter of the bullishness in the TSMC discipline on their capex. These three, for now, and especially the ones in Korea, because they're creating most of the HBMs, they also are the biggest providers of the data center memory chips, as opposed to Micron, which is both data center and smartphones and so on, and PCs. Right now, it feels like all three are going to be relatively disciplined in terms of not, because there's competition in that space rather versus TSMC in terms of end foundry. There seems to be relative discipline amongst the three in terms of not jumping ahead on aggressively investing on memory capacity beyond. In fact, if anything, they're getting out of the consumer side of the equation. They're actually cutting, they're literally treating it as a zero-sum exercise, moving capacity from the consumer side into the data center side, which is great for their financials and Wall Street, but not great for you and me or the world who wants to buy cheaper memory for our laptops and PCs and smartphones, and is causing huge turmoil in the consumer electronics segment because companies have no idea now if they're going to be. I mean, local memory has gone up 600% as you know.
Yeah.
So, but right now, I don't see any of the three doing the kinds of things semiconductor companies used to do years ago in the PC cycle and the smartphone cycle, where they would go aggressive on capex. And until we see that, I'm thinking that they're going to maintain the discipline.
Got it. Do you think my view is that my view is that it's overbought. It's crowded. I think there's more risk there than opportunity. We saw this 2 years ago too. We all knew Micron was a leader and a favorite player there, and it didn't matter. And then Micron and ASML, they all had a multi-month correction afterward. The thesis was true then. It's still true now. That hasn't changed, but stocks can get crowded. And I just find it totally. I find it funny that it's just Micron and silver are correlated when silver is an input to Micron. Both of those can't go up and to the right at the same time. So I don't know. My view is that it's crowded. I do think SK Hynix has the edge though, and it's got a better valuation.
They have the edge, obviously, in the HBM, the high bandwidth memory on the data center side. They're over 50-60%. They're like an NVIDIA in that space, actually. It's just that the other guys are just stepping away on the consumer side, and they're saying, okay, we're going to shift our resources on the higher margin data center stuff. And at the same time, they're walking away from and making their OEM customers really unhappy. You listen to Dell, you listen to the consumer electronics company, they're freaking out. CES was bereft of delivery timelines.
Dell is down. Dell is down 12% in the last 3 months. It's lagging the S&P up only 9% in the last 1 year. Hewlett Packard is down 35% plus in the last 1 year. So their customers are suffering, and it's hard to sell PCs if the cost of memory is going up. That doesn't help. It's like the gold retailer trying to sell jewelry. It's hurting the supply. It's hurting the customer. That usually doesn't sustain.
Look, my family was in the jewelry business for generations. When gold goes nuts, we would go from 21 karat jewelry to 18 karat to 14 karat. We'll economize. I mean, and that's what they're going to lower memory. So you look at the configurations on Dell or anybody online. You're not getting great prices or availability of 16 and 32 gig chips on RAM. You're now looking at 8 and 4 gigs on Walmart. Look at the offerings. And if anything else is $500-600. The only ones that have a bit of an advantage here are the Apples of the world, because they've been forward buying and investing on the consumer side of the memory equation for a while. But even their luck's going to run out in the next couple of years if this stuff persists along the lines of what we've been discussing.
It's hard to sell an iPhone if you have to do a price increase of $150.
Correct.
Like the marginal buyer is going to say, "Hey, look, that's too much."
And by the way, it's also bad news on a secular basis because less memory is bad for AI, whether it's data center driven or local driven. We need 16 and 32 gig RAMs for the AI GPUs and for the neural processors and so on. And that is not on the current calculation of Wall Street analysts in terms of what this means for the, I talked about the mainframe versus PC. This is actually negative for the PC smartphone side of the equation in terms of demand picture.
Yep.
Which means that the engineers have to make it a lot more efficient.
Right. And the supply chain behind Micron and SK Hynix, those are names like Lam Research and KLAC and others. Those have also done well. KLAC is up 94% in the last 1 year. Lam Research is up about 185%. They all have similar charts, but they're starting to put in somewhat lower highs here. And again, it all looks like gold and silver. It all looks like the same chart. I don't know. It looks like crowded late momentum to me. The cure for high prices is often high prices.
Yeah.
So let's shift. Go ahead. Yeah. Mm-hmm.
I just want to add one more thing to the equation. The thing we've been talking about, the hyperscalers and tempering of expectations. Remember, on the one side, I talked about the TSMC break, where that is a grown up. The other grown up, which is not a real person or entity, is the availability of power for these data centers. Right now, the assumptions for the power availability is way too aggressive, and one of the excuses that all of the hyperscalers to lean back on in a couple of quarters is that we're just not getting enough power. Satya said it on a recent call that I've now got potentially more GPUs sitting in a warehouse because I can't get the power, and if that is absorbed by the market as a power gating issue and not a demand issue, they may get a little bit. These kinds of companies may get a little bit more of a break. That hey, the 2-year timeline on growth, maybe if it extends another 1 or 2 years, it's okay, and we may not see the valuation hit as severe as one would otherwise.
Fascinating.
Because of the power gating. I just wanted to add that little.
Yeah, no, it's a great comment. So the ETF XLU is one of the best ETFs in the market year to date. It's at all-time highs. Although within utilities, the independent power producers like Vistra, Constellation Energy, and Talon, they're all below their 200-day moving average. So anything with high beta, think linked to nuclear, that are highly thematic have underperformed. They started rallying the last week or two, but the market is rewarding boring regulated utilities. And so you're saying are you saying that their capital planning is effective? Right back.
I'm saying that their capital planning and their process, especially through the regulatory environments, and remember, there's a lot more pushback happening at the state and local level against the AI data centers. Anecdotally, across the country, I had a post up on this by the broken up by map and regions of the country versus the federal imperative to invest in build data centers, go drill baby drill and go top down on AI centers. So the power companies are doing their best to ramp, but they can't go beyond their natural limits of 2 to 3%.
Yeah, they have constraints.
They have constraints, and so as a result, the hyperscalers have been building their own power, natural gas. I had a big post on this where they're doing behind the meter stuff, is just build capacity. Elon built a huge thing across the border, from his Tennessee kind of thing, which is over $10 billion. But there's only a few of those they can do. And the shortages, as you know, are in the downstream in the supply chain, not just the utilities, but all the components, the transformers, and all that stuff, which are all sold out for the next 3 years. And so instead of 2-year timeframes for the multi-gigawatt data centers, it may be 3 years or 4 years. And that, as is explained to Wall Street at some point, they may say, "Oh, but that's bad, but it's not as bad as the demand picture not being as robust." For all this AI compute.
It's another reason why I like the natural gas players and the midstream players, and they're doing well. And nuclear is still a fantasy from where we are now.
And in the U.S., we are talking about U.S. versus China. We are behind on solar and wind, given the current administration's negativity on the solar. China is racing ahead on solar and wind on alternatives, independent of climate change politics. Just their ability to create multi-gigawatts of performance behind the meter for AI then their problem is not having enough of the chips, obviously, because of the
Yeah, I was
geopolitics.
reading they're putting more solar energy online per day than nuclear energy.
Correct.
Substantial amounts of solar energy, and solar should be part of the U.S. equation too.
Yeah.
So there was an Odd Lots article I read a few weeks ago. Funny enough, it caused like a one-day correction in a lot of these utility stocks. And what it said is that there's an overbuild out taking place in utilities, that the energy output of these utilities, once all that capex has been deployed, will exceed the consumption demand. And it'll exceed the consumption demand because the next generation of chips, Blackwell and Rubin, will be far more energy efficient. Do you think there is a bubble in capex build out for energy? No.
No, I think we're on the energy side. I'm kind of a secular bull on energy, on electricity. My concerns are the inputs that we talked about. U.S. has far less solar and wind than that we need. I firmly believe. I mean, we can argue about 2 years versus 5 years versus 10 years, but there is no question in my mind the kind of AI demand that people like me on a secular basis foresee in terms of the compute for inference tokens and so on. We are going to need far more energy, and this is like literally the early 1900s when Edison invents the bulb, and then we need 50 years of energy wiring grid, and the multiples of compute that's energy required to build the compute is oodles more than anything we saw in the last century for lighting and growth, and so no, I think the energy picture is. And by the way, this is also it's going to become even more clear to developing countries that they need to invest even more aggressively on energy than they've thought about for the last 100 years, because this business of powering this stuff for compute, that is a very variable thing, especially if people really start to use AI agents like the OpenClaw stuff, et cetera, in a mainstream way, billions, it's off the charts. If you look at the kinds of things the OpenClaw stuff is just doing on people's computers, just running for you all day long in a separate computer over there. It's like, you don't go to sleep. The computer, I could have 4 computers. I have 2 right now that are just running my intelligence tokens, 24/7 for me. I mean,
what use
a few
case?
weeks ago,
what task do you have them on?
It's processing all my personal data. Right? And I've got it all kind of secured and containerized and so on, and from a risk point of view and it's not ready for regular people who don't muck with this. But you can totally see where this is going, that we're going to see a lot more AI implementations for people, for individuals, and this will be productized by the mainstream companies we're talking about. We're not there yet, but in the next 2 or 3 years, which means our energy consumption is going to be bigger. It's not in the analyst numbers yet. It's
right. That's interesting. You're saying that the analysts are underestimating the energy demands,
and they should not be incorporating it today because it's so early on the technology. But in a year or two, assuming OpenAI starts to build, more productized versions of OpenClaw. And by the way, every company, I mean, Meta lost out on getting OpenClaw, as you know, and Zuckerberg.
Let's go through that. Why don't you introduce OpenClaw for the audience? What it does, who built it, what's the primary application, how much is paid for it? You can take whichever order you want.
Yeah. So OpenClaw is, look, I mean, it's just it's ironic. It's a great story. It'll be books and movies done on just like we saw Facebook. It was an Austrian developer who was a successful software. He's a very competent software developer and a businessman. He built a prior company, sold it for over 100 million. His product was PDF toolkits. Went away for 3 years, and then came back a few months ago. Last year, started. He thought the mainstream hyperscalers would create kind of an open source architecture for AI agents that would just run on local computers, and he was frustrated that didn't happen. So him being a coder, he just built it like a single person. And if the last 6 months, you've probably seen Sam Altman and other people say, look, in the next 2 or 3 years, we're going to see, one-person billion-dollar companies, right? And this is one of the closest examples, and it happened to come out of Europe, in Vienna, and so literally he got it to a point, and he, with one-man show, got this out, so open source, and literally it had a bigger explosion amongst developers, with millions of developers using it for all kinds of things in the last 2 or 3 months, to the point where he flew to San Francisco a couple of weeks ago, met with all the hyperscalers, and then he had Zuckerberg and Sam basically pitching him for undisclosed sums of money to come and join them, and he picked OpenAI. So now, as of a couple of days ago, he's now part of OpenAI. He'll be running their AI agent effort, and Sam has been talking about assistance in AI for 3-4 years. I've got a big post on all this coming out tomorrow, my 1,000 post on AI RTZ, so there'll be a lot more detail on this. But my point is that it is just one. We've been talking about AI agent. I took General Magic, one of the first AI agent companies, public in 1995. I mean, people have been dreaming about agents for a long time. So, technology sometimes just takes a long time, and it's taking a long time. And so OpenClaw today is just interesting because science fiction has told us that we'll see AI agents talk to other AI agents and do things for people, but it was not yet a reality. Even in the last couple of years of the growth of OpenAI and all these other companies, even though they had plans to do it, they never got around to building horizontal platforms to do it.
Right.
And this one dude showed that his own singular effort over 6 months could create a thing that captured the imagination of millions of developers. And it's the most popular thing that developers are downloading on GitHub, which is Microsoft's software platform for developers around the world. It was the single biggest hit on GitHub in its history. And it's just an example where the energy is shifting. So just like ChatGPT 3 years ago showed the world that, hey, people want demand to be able to, on a command line interface, CLI, access these language models. Now, the same CLI interface is going to allow you to have half a dozen personal agents heed your daily tasks and do things for you constantly while you're sleeping. But it's not mainstream yet. These will be mainstream products. Things like OpenClaw's example will accelerate meaningfully the building of much more secure versions of all this stuff. What would have taken 2 or 3 years will happen in 6 to 12 months. And we're going to see all these companies doing it.
Right. So in the last week, OpenClaw's growth has been 14 times. So daily growth is about 50%. OpenClaw was published. This is crazy now. It's crazy.
Yep.
They were published in November of 2025. They were published around Thanksgiving. And do we know how much they were bought for?
No, that's not been disclosed, but rest assured that it's in non-trivial numbers.
It's over $1 billion. It's going to be over $1 billion.
Yeah, and that's for him, and in OpenAI stock, we don't know.
Right.
And by the way, he still gets to keep an open source version of OpenClaw, which will be run by a foundation. So he's basically doing the same thing OpenAI did, for profit and non-profit, and he's building an independent board. In fact, the guy who's going to be chairman of the independent board of the foundation is a fellow that I've known for a long time, Dave Moran, who built Path, and I was an investor in his earlier companies and so on. So it's basically Silicon Valley basically aggressively running with this latest innovation and productizing all this.
OpenClaw is like the modern version of like Linux, let's say. It's open source, accessible, it's got a lot of usage. I mean, Correct. It's not an open source LLM, but it's got an ecosystem around it. What were they buying? Were they buying the individual or his IP? I mean, the IP is open source.
Yeah, so they're not buying it. Great question. So the software itself, this guy built in 6 months, it's people, other software people who evaluated it. It's good code, but it's not great code. 300,000-400,000 lines. There was a company that just audited and created different versions with 500 lines. They didn't buy the code. They bought him and his vision. He's the lightning rod for this philosophy. That's number one. And remember, Meta's been paying billions of dollars for AI researchers from everywhere. So that is not insane. I mean, in hundreds of millions. I mean, from each of these guys are hiring and cross-hiring. So that is going on because it's funny money. But this dude, what they're really buying is the momentum, the community momentum amongst developers. That's Look, the hottest area
Yeah, you're right.
in AI the last 12 months has been in coding versions of LLMs, right? So it's literally been Claude Code from Anthropic
Yeah.
has literally the thing that did the 10x, the 2-3 billion that you talked about in January. That's all called Claude Code. And OpenAI is competing with their Codex product, and Microsoft over there is competing with their GitHub product. And Elon is nowhere to be seen with Grok version of Code, because he just lost half of his founders for XAI, by the way. Separate story. We can talk about it if you want. But so there are only 2 coding companies that have been super crazy on this. And this dude is basically showing a whole different layer of demand that is now real to build around. And he's going to create an open source version of it, like Linux, as you said, and there'll be a closed source version.
But you're right.
of
No,
this
GitHub
from
is a
OpenAI.
better model. They want to buy community developer led growth
Growth.
and authentic and organic. Even though there's an open source model out there, they're not buying customers, but they're buying the shot at getting customer adoption.
Attention of developers. And that is the most precious commodity right now in the software world on the planet. And every software developer, good one that I know, is electrified by this. I mean, you can see it in the forums. I'm sure you're in the Slacks and the
I'm
Telegram
not in
groups
the Reddit groups, but no, they're I mean, it seems like paying a lot of money for that. That's probably a good bullet miss. If you win the auction, you get the winner's curse. I mean, I don't know what the price is, but it seems expensive.
It's in the scope of numbers we've been talking about. This is couch cushion money for these companies, and Meta lost. So I'll have a separate post on what
it must have been a large number. Yeah.
It had to be. By the way, he said it on. He did a podcast with Lex Friedman. I would recommend people watch it if you're interested. He did 3-hour, but he said every VC on the planet called him, basically throwing money. He could have raised bigger money theoretically than the OpenAI founders.
No, he's a smart guy.
But he doesn't want to do that. He doesn't want to do that.
Right. I mean, look at like Thinking Machines. Are we still waiting to see their product market fit? Still waiting for them to deliver an impact and result? They have funny money, paper money. This guy's smart. It's kind of like Mark Cuban with broadcast.com. He said,
correct.
I built this thing in November, and now here we are a few months later. I think I'm supposed to take the bid. Smart guy. I would have done something more liquid. I would have done Meta stock rather than OpenAI stock. I think OpenAI has a big discount.
He's not motivated. If you watch his stuff, and I've been tracking him for months now, this guy, I mean, look, he was before this, he was not a billionaire, but he made, he sold his last company for 300 million or something. He cleared enough money. He's motivated. He really wants to dent the universe. He really wants to build the open source version of this. He likens this to like Chrome and Chromium as core infrastructure. He's a coder's coder. He gets into the real deep weeds on the coding stuff. And the coders around the world adore him right now. And it's as crazy as when forget ChatGPT. This is as crazy, Ram, as when the Google attention paper came out in 2017. I remember 2017, 18, 19, the world's developers went nuts on transformers, right? Including the ones at OpenAI and led OpenAI to become OpenAI. Ilya and all those guys created the whole thing on top of the transformer paper. That was the electric catalyst. And we have the same thing going on with open
I think Sam Altman has a deep insecurity, and he's trying to buy a seat with the cool kids. He brought on John Ivey for a lot of money. We all forgot about what's going on there, and they're going to launch some product. It's been a long time. Still waiting for release. That headline came and went. Now this. We'll see. I'm still in the skeptical camp.
No, I got it. And by the way, on AI wearables, I've been in the skeptical camp too. I've had several posts. They'll be linked in the post for tomorrow. But anyway, the point is, and that too, because of the dearth of semiconductor chips and the supply constraints, OpenAI was planning to launch the first of the several wearable projects late this year, and they just postponed it in it not officially, but it came out in a legal disclosure on another case. They pushed it to February of next year, partly because they can't get the components they need at the prices they need to make the gizmos, whatever it is, the magical thing.
Right. Well, let's see where is Elon in all of this. I agree. He wants to get or contemplating getting SpaceX public on his birthday in June. I think the valuation is expensive. I've been offered access to OpenAI stock and SpaceX stock at a discount to the last round, which means that's not the real price. I think the price is probably a lot lower than that. We've seen a lot of IPOs go public. The vast majority of them are below their offering prices. Figma is down 80%. Figma is well below the price that Adobe offered to acquire in 2021. The 4P is still 100 times. It's still expensive. I don't think the IPO markets can digest an Anthropic IPO and a SpaceX IPO and an
OpenAI in the
OpenAI
fourth quarter.
IPO.
Yeah.
Not at these valuations. None of that makes sense to me. Am I missing anything?
No, and just on SpaceX again, I have 2 posts on this thing. Elon is a storyteller. I mean, I'm on record. Tesla is the mother of all meme stocks, and now it's I've been talking about on our podcast and in the discussions and so on. He's getting out of the car business. It was obvious a year ago. 2 of his 4 models are gone. 3 actually, if you conclude.
Yeah, Model S and Model X. Those are great products.
And the Cybertruck, by the way, it's I love the S, and the X. I used to have both of them. It's great, but there's less than 5% of the units. The thing, as you know, is he's been directing all his Wall Street investor days on Tesla have been around humanoid Optimus robots. Millions of robots shipping next year, and it keeps getting pushed out.
But you can't pivot. You can't pivot $1 trillion business in public.
I know. I'm
markets.
about to get to you.
That makes no sense.
He's got 2 new stories. He's got 2 new stories on SpaceX. I've written about it. It drives me nuts because Tesla. It's been humanoid robots, which Adam Jonas at Morgan Stanley, Elon's banker, basically put $500 billion. He's now the robot analyst at Morgan Stanley. Adam Jonas. He was the auto analyst, and he's got $500 billion valuation and higher. If you look, he's got 8 reports on AI. You can look at it. And I've gone through them in detail. We can discuss. We can have 3-hour show on that one to talk about. So Optimus robots on Tesla, and number 2 is self-driving robotaxi fleets. Those 2 are basically what the current crop of Elon Tesla investors are saying. It's going to take the valuation from 1.6 trillion and higher.
I can see the fleet story. Look, the FSD works. It's magical. It's amazing. I can see. There's a CapEx. Go ahead. Yeah.
The question is, it's great. Cars are going to self-drive themselves. I got it. But from level 2 to level 5. But I'm not willing to pay these multiples. I'm pulling a Ram on you. I'm sorry.
I agree with you. Yeah, I agree with that.
Don't get enchanted with the FSD. It's a technology. Look, 15 years ago, my first Uber was a religious experience. Now you can buy Uber all you want, and it's 150 valuation.
NVIDIA is coming for them too, right? The picks and shovels layer to enable autonomy.
It's all coming for this, and NVIDIA. Oh my God! If we now talk about NVIDIA, no one's using NVIDIA as the core. NVIDIA is actually the real way to play the robotaxi fleet thing, and Uber.
I think so.
But those are separate core things. But let me just come to the SpaceX, because that's what you asked. On SpaceX, he changed. Because he needs to do now $1.5 trillion, $1.25 trillion valuation. 3 months ago, out of nowhere, he started to pump up AI data centers in space.
Is that real?
No,
it's not real.
No,
right? Okay.
No. I've analyzed it. If you want, I'll
making sure.
I'll bore you to tears on technically why it is not happening for 15 plus years ever. Okay. Elon tells a great story. He's on. You can watch his YouTube podcast. It's wonderful. He does it. It's the best Elon he's ever done on AI data centers in space. No. And then he's been talking about Mars for the last 10 years. And that's this big rocket, which he still needs to make reusable, the whole thing, not just the little lower part, which was a great technical achievement. I'm going to give it to him. But the whole thing is not reusable another 3 to 5 years. He'll say 1 to 2 years, but I think he's aggressive. But now, if you notice the last few weeks, because he's getting ready for the S1 filing on SpaceX, he's saying, now we're going to go and build a data center and satellite factories on the moon. Okay. His inspiration for that is the Heinlein book, which I'm a big fan of, which is these railguns shooting satellites, thousands of them. Because if you run the numbers, Ram, he needs to do either Mars or Moon, and the factories on the Moon. He needs to launch these things at dozens a month. Okay, he's not launched one yet, and that's what the SpaceX IPO. So if I'm, advising Fidelity, my old job as an analyst, I'm like, okay, do you think he's going to be able to do 100, 200 rockets over the next 2 years based on the technology that still has to be developed for every one of these things? For the rockets to the Moon, fully reusable, still not been done. AI data in space. There's huge technical issues on every front. I can bore you to tears. We can break it apart. That's another 30-minute discussion I've written about. It's just a great topic. As a science nerd, I would love to see this stuff happen. But these stories are being sold ahead of being ready. And we spend most of the show talking about how AI has unrealistic expectations. This is where the bubble is. There are so many institutions I talk to when I go to financial conferences, or they want to talk about space. I've got institutions telling me, hey, I need to allocate more on the space side. And I'm like, what for? There is nothing in space that's worth these kinds of valuations, the numbers. Even Starlink, which is the best part of SpaceX, even Starlink, every country in a major country in the world, they're building their own systems. Why? Because geopolitical risk. They can't have one billionaire say, I'm going to turn it off because I'm going to do this kerfuffle with this country or that country. So it was a brilliant invention, just like the Model S, but it's replicable.
Well, the geopolitics point is a great point. I mean, it's hurt Elon Musk dramatically. There's only one country in Europe that permits the sale of Tesla. And there are concerns around Starlink. There are concerns around F-22s, whether the U.S. government can disable them remotely. And now they've got Mark Carney in Canada trying to cut a deal with China around EVs. Like, none of the geopolitics helps Elon, except one, trade barriers against China EVs. That one does help him. We've had that, though. That's not incremental. I agree. I think they're in a tough spot. Yeah. Go ahead.
But even Ford, if you look at the CEO, he's talking about doing joint ventures with BYD and other Chinese companies for making their cars here. So once they're here, and Trump is open to, if the Chinese make the cars here, then maybe, okay, they don't get 100% tariff. Maybe it's a 20% tariff. And Ford will be a partner, or and the other auto companies are going to jump in. Same thing's happening in Europe, by the way. European auto companies are now, if you can't beat them, join them. There's partnership conversations. Canada is a great example. It's a 50,000 unit window, if I got it right, in terms of Chinese EVs. But it's a signal that the Chinese are going to run away with this EV auto thing, because they are the Japan. What they are to the world of autos today, what Japan was in the 50s to the 80s, and particularly on battery technology, particularly on solar technology, energy production, ecosystems of manufacturing, which is not just one or two fabs or plants. It's thousands of companies building all the components and micro components with people staffing those facilities that we don't even have. We're a country of 350 million people. We're competing against a country with 1,000 with STEM graduates that are 3 to 4x a year, and half of the ones that we are using and paying hundreds of millions of dollars a year, Meta, et cetera, in the US, most of them are there's Chinese citizens who came and studied at our universities. We hired them. They're building our AI today. And now the new ones, you look at the student visas from India and China, they're down 10, 20, 30% in the last year or so, because of all the issues on immigration and so on and so forth.
Right, and China's
we haven't even gotten to H-1B. So in a world that we're saying, okay, we can do it all ourselves, we can't, and that's one of the other negatives for Tesla. And Elon knows this, and he talks about it, but not too loudly, because of what he has to also do on the political side.
Fair enough. Is there anything else you see out there where you have an out of consensus view? You already shared a point of view on space. You shared a view on Tesla. We talked about data center. So those are three non-consensus views. We like that, because that's where the insight is. That's where the market's not priced in. Is there anything else you see that doesn't make sense Maybe it's underhyped, maybe it's overhyped.
I would say the one area for Meta is one wearable that the world is relatively
The
excited about
Ray-Ban?
are this
Yeah,
Ray-Ban smart glasses and so on. And
I
Meta
got
is
that too.
spending.
It's
I like these things, but I don't use them.
it's stuffed away. I can tell you where it was yesterday and 6 months before and 9 months before. It's in my closet drawer, my top shelf. It's
There you
my
go.
kids can't mess with it. It's collecting a lot of dust. I'm not using it. The battery's probably depleted. It was a one-off novelty. Use it once or twice, wonder, and I quietly kind of put it away.
And
What's a
look,
sticky?
I'll echo your thing, but because I'm a gadget geek, and my wife is very tolerant of my addiction. I have 5 of these. This is the first generation. There's a
Really?
second generation over there. There's a Oakley version in that other room, and there are the big cool sunglasses. So that's over 2,000. Most people aren't spending. This is for 500 a pop. So most people aren't spending 2,500 for ones with prescription, ones without prescription, sunglasses.
You're keeping
So
the stock price afloat. Thank you for your service. Are you wearing one right now?
no, these are regular, and that's the other thing. I
Why are
don't
you
wear
wearing it?
those things
Yeah.
because they're heavier. They have to be charged. And I'll tell you the core reason. And this is we've touched on this, which is this business of trust and privacy. Uh, I am instinctively not comfortable. If of all the 7 companies, who am I most comfortable doing? With my data, I'll go with Google and Apple. Google a little bit more reluctantly, but not with Meta, because I know everything I do, they're monetizing it
Yeah,
from an
you'll be
advertising point of view.
marketed too. Yeah, you'll be
I'm the
targeted.
product. I'm the product.
Yeah.
And by the way, Zuckerberg just announced a controversial feature, which I've been asking for years, which is give me smart glasses where I can walk into a room and it identifies all the people and tells me who's who. Oh, you met that fellow and his name is Sam, and you met that fellow 3 months ago, and it just identifies. That
Yeah.
is one of the features
There's a
that
lot of
most of
value in
us.
that. Yeah.
There's a huge value on that, but it has huge regulatory issues and huge creepiness issues. And Meta's internal memos were leaked on this, and they said there's an opportunity to introduce this feature called name tag for the Ray-Bans and the smart glasses in the next few months, and they'll probably do it because the current political environment is so turbulent that it will go under the radar. And so they're going to actually be one of the first companies to release it. It's kind of like Grok saying we're going to do saucy, not safe for work use of AI, which Elon, and he saw a huge traction, by the way, for Grok. It's been one of the leading apps in January because of that. 82% male, as you'd
Yeah.
expect. And OpenAI wants to copy the same thing. And both companies lost some of their key researchers because of that feature. Both companies are competing head to head.
Fascinating.
So this name tag creepiness on smart glasses, if Meta has traction and they're able to get away with the relatively little regulatory scrutiny, then Google and Apple and Amazon are all launching smart glasses. They'll make this a feature as well.
They have to give it a shot.
So
it reminds me. I don't know if you've seen these. There are these kind of social media parodies that have been going around where a guy applies for a job and he has an AI headset or he's prompting his phone, and there's an AI interviewer and they're talking to each other. He said the AI interviewer asked me this question: how do I respond? And then the AI interviewer gets the response. He has another question. Like these glasses are just one step removed from that.
There are already 2 or 3 startups doing exactly that. Andreessen funded one of them, and I can send it to you in the show notes. And the company, they're marketing to Gen Z exactly this for dating as well. That they've got videos of this where you're dating and and they're looking up everything about the person they're talking to and creeping out the woman by
Well, right, and that's gonna say now tell her shoes look nice.
Yeah,
your
exactly.
Shoes look nice.
Exactly. It's there. This stuff startups are doing it, and this will be part of these things. And some of this will stick, and some of them won't.
The new form of intimacy and trust building will be when people put their AIs in their pocket and they disable them. And if you are a competent individual in that world, that will be the new superpower. If if you can actually have critical thinking, you can hold yourself, and you can communicate well without the assistance of AI in the real world, which is how real business is done. $1 billion deals are done over light breakfast at a diner between corporate executives. That will be the new trust building norm. We're seeing a shift away from the virtual back to the physical, right? The dating apps are going down the tubes. There's a response to this COVID era where people lost social skills, like that generation. The next generation's hard for them to hold eye contact. So yeah, we'll see how this develops. Any concluding remarks?
No, the other thing I'll just add is that the researchers, if you watch them on their podcasts, the Dwarkeshers and the Lex Friedman and so on this topic that you just touched on in terms of the intimacy of real conversation, most of them, the researchers, they talk from both sides of their mouth. On the one hand, they want to sell the world on this amazing technology that does all these things, intrudes on your privacy, trust. In terms of their personal stuff, when you hear them just listen to what they say, they're like, oh yeah, I don't want to use this stuff. I want much more private discussions with, for my friends and family. I want to keep the AI away, So there is this dichotomy, and what my point is, regular people aren't stupid. They're, you remember Google was the first with smart glasses, over a decade ago, and within months it went from being, cover of magazines to the people who had them. I was one of them. I bought 2 pairs from a geek, and the word of the day, you can look it up on Google, glass holes. We were called glass holes. And that's coming back because the social norms that are, and this is all part of this diffusion thing, because all the companies, Meta inclusive, they think that, once they come up with a cool product that does this, name tags, whatever, they'll sell millions. They've sold 4 or 5 million of these Ray-Bans. I've seen numbers from 3 to 7 million, but most of them are like yours. They're in a closet somewhere, or like mine, just plugged away. I never touched them.
I think they just have no choice. They have to take shots on goal for the new form factor. They have no choice. And they can afford to do it. Yeah.
Especially Zuck, because he hates Apple's control of the smartphone.
Well, right.
Apple, and he wants his own platform.
Apple's hurt Meta deliberately and in targeted ways by denying them access to certain data. So yeah, he would love to have a world where he has less dependency on Apple.
And so he's very much looking at his own platform. This is it. This is what he settled on. It was Metaverse, which is why he changed the name of the company. $50 billion later. Okay,
that's really fun.
And not that, Reality Labs, not that. Now it's this, and it's also $50 billion over the next few years.
In retrospect, that name change was a top of the market signal cue, because now he's not doing much at all around the Metaverse. No. Now it's the AI verse, and we're certainly seeing more signs of these signals of I guess exuberance out there. So thank you, Michael. It's been a wonderful treat. Always a pleasure.
You're welcome.
To have fun. So much fun. We covered a lot of ground. We talked about data centers. Is it a bubble? Can these $1 trillion numbers get hit? We talked about memory prices. Talked about the geopolitics, the acquisition of OpenClaw, agentic AI, energy, defense spending. You're one of the very few people that can have such a broad-ranging conversation with, where I walk away having learned new things and I feel smarter for it. So thank you again, Michael. We'll have to do it again soon.
Anytime. It's a pleasure always to talk with you about these subjects. And I love your breadth and depth of the stuff on the financial end of it, because you're in there every day, trying to actually make a buck from all this.
That's what we're trying to do. It's not easy. For sure. Thank you so much, Michael. Be well now. Take care now.
Thank you. Thank you.